Hello, everybody. It's Mark Yegge. I hope you're doing fantastic today. It is the 20, what do we got? The 24th? Jeez, 24th of January. We are in a green market. That's the cool thing. I hope you're doing well. Although in some stocks, it doesn't feel like it. In some stocks, we're getting some breakouts like Netflix and not MicroStrategy, but Microsoft. No, Meta, one of those M's. Anyway, things are going very well in a few stocks. We are green, so that means the tailwind is behind us, and that's what we want to try to take advantage of if we possibly can. Let's take a look at a couple of slides so that you know what the heck I'm talking about. If you care, this is kind of fun. It's fun when you're in a green market, right? So let's take a look here. So we are in this green market, and you can see that's last week's chart. You can see I have 4 green lights. This week we got 4 green lights again, and we're just going up since we made that call here on the green market last week. So when a stock market starts to move up, you get about a 70% move, and your 70% chance of your stock is going to move as well when it moves up. So you might as well be in stocks during that period of time and try to be protected during red markets, which we just got out of. NASDAQ Composite gap up 3 days ago on this Stargate announcement probably, and heading up for that 20204 level. The S&P 500 bouncing back up over a 50-day moving average, which is great. Couple little gaps in those charts. Really good stuff going on in S&P 500. Dow Jones bouncing up over that red line, that 50-day moving average. That looks good. See, when things go green, everything goes green. It's just kind of amazing. And I'm not always right, but my system predicts 75, 80% of the time that it's right. And kind of nice. Okay, look, this looks almost exactly like the other one. The New York Stock Exchange still got a little bit of work to do to get to that 2332 level, but it's heading there, and it's heading there after being down here for a while. This is not a good period of time. It's like a month where it was under the 50-day moving average, and if you were out on the golf course in cash, that was probably the best way to be, and now we're in green, so the opposite should be true. The volatility index, this is the panic index. Panic is getting reduced in the market, and here's a couple of interesting things. If you're in safe money, so if you went to the broker and you said, "Hey, broker, put me in a good portfolio," he puts you probably. I have a lot of wealthy friends that are like, "I give my money to that broker because he's the smart guy and he's the financial planner." And broker said, "Well, we're going to take 40% of your portfolio. We're going to put it into this treasuries, okay? And you're going to get 3 or 4%. Look at what's happened to that 3 or 4% safest money you could possibly get. Back in 2020, it was worth about 180, and today it's worth about 80. So if you lost about 60% of your money, but don't worry, you got 3 or 4% in interest while you waited for yourself to lose 60% of your money. So we've got to watch out when they tell us that the safest money out there is backed by the full faith and credit of the government, because the market doesn't see it as being safe. It's down significantly, right? So you've got to watch that stuff. You got to watch what they tell you. Got to do your homework. You got to not give up your power and your health, your wealth, or your time. These are the 3 things that are the most important things for your life. Don't give it up to some salesperson. Please, just be careful with your money. Jeez, people buying treasuries and riding it all the way down. Oh, don't worry, it'll come back. The government, the safest money you could possibly get. Well, they print it out of nothing, and it debases your money. It's horrible what they're doing to people. All right, enough of that. This is the airline index. Hit an all-time high again this week. There's something cool going on in airlines, and that means there's people spending money and people flying. So I'm not sure what that's telling us, but I don't think it's bad. I think it's pretty good. Taking a look at the gold bugs index, this is supposed to be pretty safe money, gold and gold mining and all that kind of stuff. Well, it doesn't look very safe to me. In fact, there's a death cross happening right here that you got to be careful of. It needs a lot of work just to stay above the 50 and the 200. I don't know about gold right now. And then you can look here at the broker-dealer index hitting all-time highs. Look at all these 10 days in a row of closing up at the high, right? On those candles. Each candle closes with this little nub at the high. Something going on in the broker-dealer index. People are looking bullish in the markets. The housing index was getting slaughtered over the last month, and now it had a little bit of a bounce. So that's kind of good. The housing index tells us a lot about the economy, and maybe the economy in the last week since the inauguration is thinking, okay, this is kind of cool. All right, Apple. Apple is trending down. Is Apple going out of business? No, probably not. I don't see a world without Apple, but I do see a world without a $260 Apple, even though I still think Apple is long-term in a bullish trend. There's some major selling going on in Apple, and we had a gap down 4 days ago. I don't know what's going on with Apple, but you got to watch it. It's probably going to hit that 220 level or that 200-day moving average level. That 196 will be in play if it hits that 200 level. There's, like Apple's on the way down, it looks like to me, and it needs a lot of work to stay up. So be careful with Apple. Nonetheless, if you trade with me and my students, you learn how to do negative or protection or hedging or on the way down. Look at Apple. If you can get $432 a contract every week at the money, and I would be in the money on Apple right now, you can make 98% a year on the juice. So why would you want to just ride this out naked while it's going down to 200 when you can protect yourself with some of this juice week by week? If you protect yourself for 5 weeks at $432 a contract, I mean, you're almost at, you're $2,000. That protects a lot of downside, protects you all the way down, right? Anyway, okay. MicroStrategy is a stock that a lot of people in our group are trading, and it's pulled back a lot since the high. It's trying to shore up against that 50-day moving average. Not a lot of excitement with MicroStrategy, even though Bitcoin's kind of playing around with these all-time highs at 108,000 per coin. But nonetheless, MicroStrategy has an interesting take on it, and you can make juice while you wait. We call it juice. You get $1,715 a contract. That's a 234% annualized return. If the stock does nothing and all you do is sell these calls at $1,715 a contract. Tesla coming into numbers next week. It's got a healthy little pullback going. You see the relative strength. It's stronger than 96% of all the other companies in the database. And who knows what's going to happen at numbers? Is it's going to go down and hit that 50-day moving average? Is it going to pop up and hit that all-time high? I don't know. Maybe somewhere in between. I'm not trying to predict it. All I'm trying to do is collect $1,900 a week in juice, and if I can do that and the stock doesn't move at all, I end up making 233% ROI on my account. Or if I want to be a little bit safer, I sell a little bit deeper, and I only make 158% return on my account, and I pick up $1,292 per contract. However you want to look at it. We teach you how to do the different ways. All right, let me whip through a couple of these. This is a very choppy chart, isn't it? Right? Like it's not going up, it's not going down, it's kind of going sideways, right? You can see the moving averages are crunching down. There's not a lot of juice in these contracts either. Still pretty good, but you got to watch out because there's not a lot of great stuff going on with Microsoft. Same thing with Amazon, although Amazon is at least chopping up higher and hitting all-time highs, and maybe still in this extended breakout from the $200 level. It's been pretty healthy. Relative strength is 90. That's good. Amazon pays you only $268 a week, though. Look at that. For a yearly trade, if you do these covered calls, only get you 58% only, right? That's pretty good. And it's because there's low volatility in Amazon. So they don't pay you a lot when there's low volatility. All right. Coinbase looks like the chart. If you're a Bitcoin or a crypto person, it's been a big week in crypto with the new administration. So that's what's going on there. It looks pretty good. It's saved the 50-day moving average. So that looks pretty bullish to me. At least for going for that 349.75. We'll see if it has the strength to move up. This is all really, really weak, really weak. So you need some strength like this. Look at the strength you have here, and you see the stock performing. A lot of these blue candles above that 50-day moving average volume line, boom, stock goes up. When it comes down, that's good that there's not a lot of selling, right? Because when there's not a lot of conviction on the selling, that's bullish. And so now it's bullish, but it needs some more volume just to make this thing work. Okay. We don't need to go through the covered calls on it. Broadcom, big breakout a couple of weeks ago, gapped up on huge volume, and now it's kind of trying to stay at that 251.88 level and keep going. That's pretty healthy. Alphabet is at an all-time high. It wants to break out at the 202 level. It had made its big, long cup and handle base and broke out from that, and now it's trying to hold it. Apple, even though I'm not searching on anything anymore. I use ChatGPT to do my searches. Alphabet still is showing some resiliency, so I don't know what's going on. A couple of breakouts going on that I'll let you know. Meta is breaking out right now. Netflix is breaking out on these huge numbers that they posted. Look at this incredible volume here. So Netflix looks pretty good. CBRE looks pretty good. And you know what? I'm just going to stop right there because that's enough. But bottom line is we got a theme going on, everybody. The theme is it's green. That means Like I always tell my students, it's time to buy something when it turns green, because you generally get a movement of about 15 to 18 trading days on average to corroborate what's going on in that green market. So listen, I talked a lot, and I appreciate your being here every week on the Market Pulse. We do these every Friday, and we do it before the market closes, so you can get your moves made for the next week. Hope you're enjoying them. If you are, put some comments down below if you're on YouTube or Rumble. If not, thanks for being here. I certainly appreciate it. If you want to subscribe to my free newsletter called Insider Tips, if you're on one of those channels, there's a link down at the bottom. Thanks for being here. Have a great weekend. See you next time on the Market Pulse. Bye.